Midland Wealth Management presents Market Insights.
Welcome to the monthly market update from Midland Wealth Management. I'm Chris Zabel, Portfolio Manager. Today I wanted to take a few minutes to give you an update on the markets for the month of July. The stock market continued to trend higher in July, but it wasn't driven by the big technology companies. The S&P 500 index was up 1.22%, despite the technology sector being negative for the month. The market saw a rotation in small caps, with the S&P Small Cap 600 index up 10.8%. Wow, what a rally! Small cap stocks benefited from the expectations for potential rate cuts. For the month of July, international developed markets outperformed the S&P 500 index as the MSCI EAFE index was up close to 3%. The emerging markets lagged the international developed markets as it was up only 0.55%. The first estimates for the second quarter GDP growth rate came in at a 2.8% annualized rate and exceeded expectations. The higher than expected growth rate was driven by consumer spending. The Federal Reserve met on July 31st and held its key interest rate unchanged at their current level of 5.25 to 5.5%. The Fed did say that a rate cut could come as soon as September, citing overall economic data, including employment and unemployment. This is a different tone from the last meeting, where inflation was the main focus for cutting rates, not the jobs market. June's core personal consumption expenditure rose by 0.2% month over month and 2.6% year over year, as inflation continued to moderate at a slow pace. With the latest economic data and Fed meeting, the markets are now pricing in 3 sequential rate cuts at the remaining 3 meetings for the year. Earnings season kicked off this month with a strong start. So far, S&P 500 companies are growing second quarter earnings by 9.1%, with about 70% of companies reporting. Meta was the latest Magnificent 7 stock to report, announcing earnings that topped expectations. The labor market remains relatively strong, with unemployment rate at 4.1%. The U.S. employment report will be released on August 2nd, and the market is expecting the economy to add 176,000 jobs, and the unemployment rate to be unchanged at 4.1%. Investors will be monitoring the reports more closely, as the Fed acknowledged the jobs market at its latest meeting. As always, thanks for joining me for this month's market recap.